Hello, everyone. I'm Antoine. I'm the founder and CEO of Palico. And thank you very much to all of you for joining this session today. I hope you will find it interesting. Myriam is here with me to talk about the market, especially the secondary market.
So let's start with a quick update on private markets before we dive into secondaries. 2025 has been a turning year, a bit more stability, but still a lot of adjustment. Antoine, you've been watching these trends for over 3 decades. Let's unpack what we're seeing across fundraising, deal activity, and LP behavior. So, Antoine, fundraising slowed sharply but seems to be stabilizing. 640 billion raised in the first semester. And on top of that, 2.5 trillion of dry powder is still waiting. With some of this starting to age, by the way, especially on the buyout side of things. Is this high level of dry powder a sign of strength? Or maybe is it more a source of pressure for funds that are struggling to deploy?
Well, my feeling is that it's actually both. Most LPs will probably tell you that they've been waiting for distributions for many years already, some for the last 4 years. Most of them aren't investing in new funds because of that, which means that because there is still some deal activity, the dry powder side of things is diminishing, which means that the digestion, which is going to take some time, is just at its beginnings. And we'll talk about that later when it comes to how long is this situation going to last. But overall, I would say it's good news because, again, things are starting to normalize, and probably bad news too for some GPs because they are indeed under pressure to try to put money at work in a very strange environment because a lot of this money, sorry, in on the dry powder side is like 4+ years old, and it's pretty much the end of many investment periods.
So that leads us straight to deal activity. Exit activity has picked up again, but still lagging a bit. Do you think this rebound is sustainable, or are we still in a fragile phase of the?
Fragile is probably the right word. I mean, is there any reason on the macro level that could lead us to think that more deals will be executed? Probably not. Investors are still very cautious about what's the future gonna look like, so they're not really ready to invest money at the expensive prices that sellers would want. So I would say that exits are gonna remain quite slow over the next years, especially over the next quarters. Liquidity is a consequence, right? LPs won't be receiving a lot of money moving forward, which actually leads us to our main topic here, and this is what we will cover in a few minutes. But the secondary market can be a very good adjustment tools for LPs looking for liquidity and not getting enough from their GPs.
Okay, so yeah, that brings us to liquidity. What do you think needs to happen for distributions to overtake capital calls again? Because we've seen a discrepancy between capital calls levels and distribution level among the last few months and even years.
Well, there are really two scenarios. I think scenario one, which is probably the most likely, is that in a few months from now, interest rates, especially in the US, will go down, and QE may actually be put back in the picture. And this means that we would basically go back to a few years ago where it was fairly easy to reach a higher liquidity level. If that's the case, you will see more money going out of funds than money going into funds. So this will be, I guess, nice for every LP out there. Now, if the macro situation doesn't improve and interest rates stay where they are, again, I'm not too sure this is going to happen, and QE doesn't happen, then it will take a lot of time because there is a lot of uh, old NAV in funds. I've read somewhere $150 billion of old assets that will need to be sold at some point, but where prices are not where they should be if they want to find buyers. So hopefully, and I know it's not always easy to count on the macro aspect of things, but hopefully interest rates are going to go down. QE may be resumed, and liquidity will happen again. But I think this is really something that, at best case, is probably mid 26. Worst case is probably like 27 or even 28, if the stock of assets doesn't decrease quickly enough.
Sure. And so this will obviously affect how LPs view their next investments and their strategy. They seem to be more selective and increasingly focused on DPI rather than on IRRs as in the past. How do you see that influencing fund strategies in the coming years?
It's probably not gonna influence a lot, except that GPs will need to rely on operational improvement much more than leverage and multiple expansion. A leverage and multiple expansion actually accounted for like 2/3 of returns for the period from 2010 to 2021, roughly. So for about 10 years, most of the money was coming from the financial aspect, the financial side of things, and not so much from the businesses themselves. Obviously, those two factors are now out of the picture, and operational improvement and just buying cheap, if it's still possible, is what really matters. Investors, indeed, as you said, Myriam, don't really look at IRRs anymore. Obviously, they matter, but what really matters is the money they're getting back and how quickly they're getting money back. So DPI is definitely the three main letters now in this business, and they have overtaken the other three letters, IR. As it says here on our slide, the best way to get DPI more quickly, if for LPs who want it, is to go through the secondary market. I'm referring to the LP-led secondary market, which is different from the GP-led secondary market. And again, we will maybe talk about that later. Secondaries are really becoming a portfolio management tool, really, and not so much, a fire escape like 10, 20 years ago. I remember doing a first secondary transaction when I was in my previous firm in 1994. So that was a while ago. I guess we did none in 95, none in 96. And the market really began to take off in 98, 99, when we created, again, at my ex-firm, a secondaries desk. At the time, it was really most of the sellers were really in high distress and wanted out as quickly as possible. This is absolutely not the case today. Most sellers are obviously, yes, looking for liquidity, but even more looking for a good way to manage their portfolio nicely. And actually, many are buyers and sellers at the same time.
Okay, so you definitely think that we'll see more LPs using the secondary market proactively just to optimize their portfolios rather than waiting for liquidity events.
Actually, my feeling is that in maybe 5 years from now, every LP out there is going to be an investor in new funds, like they are already today, a buyer of secondaries and a seller of secondaries. And I would say they will be doing the three at the same time. There's no reason why LPs even in an illiquid space such as private equity/private markets, don't use such a powerful tool as the secondary market, especially, and again, we'll talk about that later, at times when you have a lot of new buyers coming from the traditional side of things. And by that, I mean, traditional LPs, insurance companies, pension funds, high net worth families who feel that buying on the secondary side makes a lot of sense. You get to see what you're buying. Most of the time you get a discount. Your money is at work right away. Liquidity is much shorter. I mean, getting money back is much shorter. So a lot of nice aspects. Actually, a friend of mine a few weeks ago told me I don't see why I should invest in funds anymore. I should do secondaries only. I'm not too sure that's the right strategy. Maybe not, but I think it's worth thinking about it.
So that's a perfect segue to our next section, the secondary market update, where we look at how these broader private market dynamics are translating into record activity, and we'll also look at what to expect into 2026.
Yes, indeed. So, I mean, volume-wise, I guess that most of you in this webinar know those numbers. I wouldn't say by heart, but at least you've seen them many times. Last year, the number was about $160 billion of transactions. Over 50% were GP-leds. Over 50% were LP-leds, and the rest is GP-led transactions. So for those who are maybe not that familiar with the terms, LP-leds are transactions where investors in funds decide to sell. So they are the decision maker and they run the process. And then at the end of the process, they will say yes or no, depending pretty much on the price they're getting. A GP-led is run by the GP, and this is usually involving one asset, sometimes a number of assets, and they are the decision makers. I mean, they're running the process. Of course, LPs are deciding to invest or not, but it's really their business and not so much the business of the LPs. As far as we're concerned at Palico, we deal with LP-led transactions only. So that's just for definitions and what we do in this space. When you think about it, 160 or $150 billion of transaction is pretty much 1% of what's out there, right? So I mean, there are different numbers out there, but the size of the private market asset class is about $15 trillion. So 150 is just 1%. So there's really room for growth. Especially if a lot of this is now business as usual, which is what I just said a few minutes ago. So that's the first point, right? 160. We feel it should grow to over 200 billion. I think this is also a number that most agents are giving. So somewhere between 200 and 250 billion for the year. With again a pretty large portion of GP-led transactions, even though my feeling is that at some point LP-led will be most of what will be happening moving forward. There is a lot of money available right now for this asset class, I mean, these transactions, as we say here, over $300 billion of capital available in secondary funds. And this is not even taking into account all the money that is coming from these occasional buyers that I was referring to earlier. So those insurance companies, families, etc., who are putting more and more money on the market via the secondary side. So we estimate that to be 100 billion. This is a lot of the people we have on Palico, and I think this number is going to grow exponentially over the years. 100 billion is actually not a small number, right? We will all agree. And this is where a lot of the good prices are coming from, because these people are not so interested in discounts. Obviously, they like doing good deals, but their main motivation is to put money at work. So there is a lot going on in this space, and the fact that we've gone from, let's say, 150 secondary funds, probably like 30 secondary funds back 20 years ago, 15 years ago, but today about 150, 200 secondary funds. I think the number of occasional buyers is probably like 1,000 right now. We have a few hundreds on Palico at least, probably close to 300-400, and growing. So this is a first big change in the business. The other big change is that the pipeline is huge. Our friends at PJT give us 300 billion of secondary deal pipeline, which seems very reasonable given what happened over the last month, and the appetite for secondaries, both on the buy side and the sell side. Pricing, I mean, no big surprise. Actually, to me, this is coming from Jefferies, by the way. Actually, the venture growth pricing here seemed a little high. I mean, the transactions I've been hearing about, or the transactions I've been seeing, are usually done at much lower prices. This could be a few very good ones. On the buyout side, we are approaching par, which is also probably not a big surprise given the huge appetite on the buy side for good buyout exposure from day one. On average, my feeling is that unless something major on the negative side happens in the world, prices will go up because there is more demand than supply. And that's the case all the time. So buyouts is definitely the strongest, both in terms of pricing and activity. VC, even though I just said a few minutes ago that pricing is low, is probably going to get better because appetite is increasing too. In a lot of secondary funds and some occasional buyers are looking at this market as becoming interesting again because it's most of the dust is now settled, and it's easier to understand who's going to win and who's going to lose. So overall, pricing is pretty good, and it's probably at the right time to think about doing some arbitrage in portfolios. So a few things here. I mean, lots of things actually, and some of the things we spoke about already. I think the most important one is that you now have something that we can call programmatic sellers. So LPs who are now coming to market often, sometimes more than once a year, to prune some positions here and there, depending on the market activity, pricing, et cetera, demand, obviously. So that's, I guess, point one. Point two is that in addition to these people, you're seeing a lot of first-time sellers who look at their larger counterparts and think that if they're doing it, why shouldn't I be doing it, right? They are hearing about good prices. They're hearing about the fact that this is the right solution from a liquidity standpoint, and they're willing to go ahead and sell. It's not always easy for these people to do it, And that's my 10-second publicity, but I think Palico is the right way to do it. But I mean, we'll come to that later. We spoke about new entrants, occasional buyers, non-traditional buyers. We're all hearing about the 40 Act funds who are becoming a very large force on the buy side. They have to put money at work right away. The secondary market is, I believe, apart from the direct side of things, it's the only way to do that. They are very good buyers, and a very strong competition to most of the secondary funds. So again, the market is changing, and all these aspects should be taken into account. Now, one final comment: most of the sales today are not fire sales, and it's really more about managing a portfolio. And as I said earlier, I think in a few years there's no reason why LPs wouldn't be selling and buying secondaries in addition to investing in new funds. So I feel this is the way forward, and at some point, maybe 5, 7 years from now, maybe 10, but this is going to happen. You will see thousands and thousands of LPs on the secondary side, buying and selling.
So that brings us to the next part, the Palico Marketplace Insights. It's been an exceptionally active year on the platform, and we've gathered some interesting trends and data points that explains a lot how investors are behaving in today's markets.
Next slide, please. Yeah.
So far in 2025, we've seen close to 1 billion in listed opportunities on Palico. That's a record pace for us. And over 150 fund positions have been listed this year alone, with 60% of sellers being family offices and high net worth individuals. So that confirms what we've discussed earlier. Secondaries are no longer just for large institutions. They're really becoming a mainstream liquidity tool for all types of investors.
And because we have 2 months to go, there's still, I mean, we have a chance of getting much larger numbers before year end, especially because the end of the year is usually super active.
Exactly, and this is also what's interesting in this smaller mid-sized market. It's a market that is yet to be untapped. And so this trend can be seen across all fund strategies. Palico hosts transactions across buyout, venture, growth, infrastructure, credits, basically any type of private capital funds. And while the exposures of the funds we see being sold on Palico is mainly US and Europe, we also get a variety of quality funds that comes from all over the world, including some very focused, more regional local funds. In terms of vintages and activity overall, 60% of our activity relates to older tail-end funds. So portfolios that investors are optimizing to simplify holdings, because sometimes it's just one people managing a portfolio of hundreds and hundreds of positions. And also to recycle capital. Once there is a sufficient DPI on a fund position, better to reinvest in an opportunity with more upside rather than waiting for liquidity for years. And so sellers are efficiently cleaning up portfolios while offering the possibility to our buyers to acquire those fund positions, even the smaller ones. So the platform accommodates all transactions from the small 500K positions to even bigger portfolios above 100 million, as we've seen earlier this year. And the average size per line in this year was around 5-6 million. We've also developed a feature that allows sellers to go through with a mosaic deal structures to optimize price discovery. So this is for sellers who are willing to clean their portfolio, but are not necessarily that don't necessarily need to sell it as a whole. And it allows buyers to bid for either the whole portfolio or just select the parts of it and price them independently, so cherry pick what is most interesting to them. And some buyers even do both to maximize their chance of getting the deal. So that's really the core of our mission at Palico. It's gathering feedback from our members to make it as efficient as possible digitally for any kind of transactions. On the buy side, as we see here, Palico has a truly global investor base. So it's a lot of North America and Europe, but also buyers from anywhere, especially because we do have this very robust buyer base of LPs, not only secondaries fund, but also, as Antoine was mentioning earlier, more occasional buyers who used to do primaries and that are now looking at secondaries. And so the breakdown by fund type speaks about it. We have a lot of family offices and high net worths. It represents approximately a third, but also fund of funds and secondaries fund, asset managers, RIAs, and even pension and insurance company investors. So this diversity ensures that sellers receive maximum coverage and competitive pricing. And with such a broad range of buyers, there is an investor for every type of opportunity, whether it's a blue chip global fund or more focused regional strategy. And it's also a fit for every buyers who may be more focused on some specific opportunities. So Antoine, maybe you want to speak about the buyer diversity in terms of the strategies they're targeting and the geographies as well.
Yes, sure. Yes, sure. Well, as we touched upon earlier, again, this is a pretty broad base of buyers. By the way, all of them are KYC'd, etc. I mean, to be member of Palico, you have to prove you're a real legit LP and send everything and of course comply with all the rules. So we have very serious people on the platform. Most of the names you will recognize in a second, and some are much less known. These people are looking for pretty much everything, as it says here. Of course, the two main areas are North America and Europe, which is pretty much the market today. Now, most of our 50% of our buyers are looking for Asia exposure, for instance. As far as strategies go, it's pretty much the same thing. Buyout is obviously the key part here. But as I said earlier, VC and growth is becoming higher and higher as a search for asset class, sub-asset class, and pretty much everything else is in there. So where secondary transactions were pretty much only the fact of VC and buyout a few years ago, it's today pretty much everything. Infra is probably going to become huge. Private debt is also going to become huge. Also because on the primary side, this has been, the flavor of the years recently. Now, yeah, go ahead, Mia. I'm sorry.
No, I was about to say, building on that buyer diversity, we can also look at what buyers are interested in terms of vintages. And so most buyers are naturally more interested once a fund is past its deployment period and there is visibility on the portfolio. That said, even tail ends and early secondaries attract solid interest from certain segment of buyers on Palico. But what makes Palico really stand out is that we focus on the small and mid-side end of the secondary markets, the part that is usually underserved. That means we bring liquidity to opportunities that traditional intermediaries often don't cover. And we also bring deal flows to LPs and buyers who were initially not looking at secondaries, who had this primary approach, and who can now invest via secondaries as well.
All right, so we are reaching the end of this presentation, and we will turn to Q&A in a few seconds, but maybe four things we want to leave with you. First of all, being a platform helps new sellers and non-traditional buyers. We're seeing, for instance, a lot of occasional buyers like mid-size insurance companies or even larger insurance companies. But again, that's just an example. These people are looking for deal flow. They're looking for easy access into the market. A platform is really there to do that. Super transparent. So that's one aspect of things. Putting new sellers and non-traditional buyers in the same room, let's say. Of course, traditional buyers are very welcome too, and this is still a very large portion of our platform. Transparency is a key word here. The system is a machine, right? There's no one in between, no one favoring buyers or sellers, etc. It's just a process. It's technology. Technology means transparency. And this is huge, especially in a market that is becoming very tough to understand for some, and especially at times when the market is just increasing a lot and booming. Small secondaries, again, we spoke about that. That's really our specialty. Not the only thing Palico is doing, but the specialty of this platform. The reason why this platform exists, if you have 1, 2, 3, 4, 5 million for sale, even in a great fund, traditional agents won't take your business because it's going to be too small for them. Small agents are probably going to say yes, but then who knows what's going to happen. Do they have a wide network? Do they have just a few friends they're talking to, etc., etc.? So not too sure it's the right solution. Talking to GPs is usually not the best solution either, because pricing wise, they won't help getting the best price. It's definitely not their business. And doing it yourself, if you're an LP, a seller, is going to be a lot of time wasted, especially if it's for a small outcome. Small secondaries come into also different formats, and some sellers are listing multiple small secondaries. So I guess we could call that a portfolio. Sometimes 10, 20 smaller positions, either sold as a whole or, as we said, using a mosaic approach to sell different pieces to different buyers. But again, I mean, small secondaries is going to be a key aspect of this market going forward, not only because you are seeing all this retail money coming into play. We're not really at Palico into retail, but obviously smaller tickets. And also because you are seeing so many very old LP portfolios, limited partnership portfolios, where you have a lot of small positions, not because they were small to start with, but because they're just old. And what remains is just small pieces of 2, 3, 4, 5 million, and a portfolio of 100 lines of 3 million won't be of interest again to most of the agents. So a platform is probably the best way to do that. The Palico platform is also very helpful when it comes to buyers. They can use it for their own purpose. It's not only about sellers putting stuff for sale on the platform, it's also for buyers to proactively create deal flow. They are soon going to be able to put buy offers on the platform, which may actually turn potential sellers into real sellers. If you see someone with a name of a GP, a fund, and a price, and that's of interest to you, potential seller, well, guess what? You may actually become a seller in a few seconds. And this is actually something that is going to be definitely transformed thanks to the digitization of this space. So I
That's great.
guess that's it for our part, right, Myriam? Am I correct? So we
Exactly.
are going to turn to Q&A. We have, I mean, we planned for 20 minutes of questions. If we have 20 minutes, it's fine. If we have less, it's fine too. But I think we won't go for more than that because this is the slot we've put into everyone's calendar. So thank you again, at least for this first part. I hope it was interesting. We are fully ready to answer questions now and later, obviously. Please feel free to reach out to us at any time. And who shoots first? We're gonna turn to questions. So please, how does it work, Myriam? People have to write their questions, right?
Exactly, exactly. You can write your questions as comments in the live webinar. And we do have a few first questions. So a first one on what to expect on the size of the 2026 secondary market. So this one is more global, and then another one where we could about the future of Palico potentially being a platform for family offices, high net worth to access GP-led opportunities. So maybe we can start with the one on the size of the market because we actually do have a slide about that we haven't seen yet, but that we can potentially show to support answering this question.
Yeah, I'm not even too sure we need the slide, but if we find it, that's great. But if we don't have it, I mean, no worries. So again, this year is going to be like 200 to 250, right? $1 billion. 2026, given what we're seeing, is going to be more. I think 300 could be the right number. And my feeling is that the LP-led portion is going to be much higher than the GP-led portion. Why? Because we're seeing more and more LPs becoming accustomed to the secondary market, and they're gonna buy and sell, that for sure. I'm not suggesting that the GP-led side is gonna go down, but in proportion, the LP side is probably gonna be much more important. In the same questions, I'm reading, are buyers becoming more selective about vintage or strategy? I mean, they've always been very selective when it comes to what they're buying, and whether they are, super professional buyers or new buyers, they all want to make sure they're buying, the right assets at the right price. So, of course, if you talk strategy, venture has been very much out of the scope for a number of years because it was just too tough to price. My feeling is that it is going to become a little easier. And also my feeling is that many LPs holding VC fund positions and hoping for better times may actually sell those where there's no hope anymore. So I mean, pricing wise, it's not gonna be great, but at least they will get some liquidity out of those, even if they are the dogs in their portfolio, unfortunately. You
So
want me to answer the family office high net worth? I mean, of course. Now, I mean, is the platform gonna be used for other type of transactions? I mean, yes, potentially, right? And I think it's been designed to handle transactions such as, ranging from, I mean, today designed, I mean, doesn't really mean anything. I mean, but because the design is the same, but from, let's say, 1 to 5 million a piece, if you can do that, you can add a few zeros and it's going to be just exactly the same process, same buyer, same everything. So, I mean, from that standpoint, there is room for growth. Is it gonna be a platform for GP-led? Not sure though, because I mean GP-leds. That's if this involves a company, it's really a complete different story, right? If you're buying fund XYZ4 or ABC3, at the end of the day, you're looking at a NAV that is pretty much constructed the same way everywhere. So it's easy, let's say easy, not that easy, but easier to come up with a price even for new buyers. If you talk companies, it's a complete different story. So if I had to answer yes or no in a few minutes, I would say no. And we will do LP LEDs only.
I agree that we started with LP-led secondaries because it's a process that can be fully digitized and fully streamlined. And that's why we're seeing a lot of first-time sellers and a lot of occasional buyers who've never done any secondaries as buyers before. And I agree that on the GP-led side, it it would need a lot of involvement from GPs for them to tell the story behind the transaction they're pursuing. So yeah, I would add to that it's maybe in a mid long term period where GPs would be highly involved to pitch their opportunity.
One thing that Palico or other platforms could do, though, but I mean, this is definitely not on the map right now, is to help a lead investor gather smaller interests, right? Um, Using his or her terms. So by that, I mean you find a lead investor for a GP led, and then you use a platform to find the smaller tickets. But you probably won't use a platform to find your lead investor and negotiate, etc. This is not happening on a platform.
So we
We have another question on tender offers. That's actually a very good one. Thank you. Uh, could Palico be used in the context of tender offers on fund? The answer is a big yes. This is something we are developing right now. We have a first one live actually on the platform, and we should be listing many more soon. Two reasons. First one, you have now many funds that are past due, right? So funds that are like 10, 12, 15 years old, sometimes even more, where LPs are definitely ready to take their liquidity and go. Where you still have some nice assets though, and where some LPs on the buy side this time are interested in investing at discounts most of the time in things they can look at. And because there it's the game is about putting together a group of LPs, I think a platform is very well suited for that. So tender offers, yes, absolutely. That's even more than on the radar screen for us. It's being implemented as we speak.
So another question on the possibility of democratizing secondary deals through a platform that consolidates several small tickets from retail in order to acquire an LP stake, sort of a crowdfunding. Do you want to take this one, Antoine?
Yeah, that's a very good question too. I mean, I haven't thought about that. Thank you for for asking and suggesting. Probably too complex right now, given where the market is. Yeah, I think retail investors, I mean, are not directly playing in the space, and I'm pretty sure it won't happen for some time because, I mean, it's even though it's becoming easier, it's still a tough game, right? So getting the deal flow, pricing, understanding the traps, sometimes there are traps, coming up with the right structure, etc., is not easy for retail investors. Now, some intermediaries are probably working on that, and some funds of funds too. So they could use Palico to get there, but I'm not too sure that Palico could see some direct business on that front. What else do we have?
So we have a question about how the process works on Palico, and the answer is the process works on Palico as everywhere, but except that everything has been digitized, so we can actually show you the light version of the platform. I will share my screen where you will see what you can access with just an email and a password, so that it walks you through the process as well.
Yeah, just maybe, Myriam, for our listeners, I think that, I mean, what we call the light version is a version where all the names are actually, not visible to anyone, just to let potential users see how it works, right? But if they want to see the real names, etc., they of course have to go through the KYC process and become full members. So what Myriam is going to show you is what a light user would see before becoming a member.
Exactly. So you should be able to see my screen. So as Antoine said, in order to see have access to the full version of the platform, every users have to go through the KYC process. On the process, so this is what all users will see when accessing the platform, and the process can actually be seen on every opportunity. It's a two-round process. The first round for indicative offers, where buyers, if they are more familiar with the fund, can also directly submit and kind of preempt submit the binding offers. And then, so in the case of this opportunity, the deadline for the first round is tomorrow. It's 2 weeks for the first round, but the deadline on this one is tomorrow. Then the seller has a bit more time to review it than usual because he asked for it. So every process can be tailored, but usually it's 1 week. And then buyers will have 3 weeks to make their binding offers. The buyers that have been shortlisted to the second rounds will have 2 weeks to make their binding offers. So we've spoken about mosaic sale. This is a mosaic sale. This is a portfolio with several lines, but the buyers can pick and choose the lines that they are mostly interested in. They make their bid directly on the platform. They can chat with the seller, and everything is embedded in the marketplace.
Thank you very much, all of you, for being part of this webinar. I hope it was of high interest. Again, as I said earlier, we are fully ready to answer all your questions. I guess we answered some of them already, but I'm pretty sure that there are many, many more. You can go to www.palico.com and see everything, how it works, etc., and become members and transact on Palico. So with that, again, thank you very much to everyone, and see you soon on Palico.
Thank you
Bye
very much.
bye.